Peter Rose, Longwood currency trading. Why don't you feel you're not getting enough money out of the trades that you're making? Let's talk about that and see what we can think about it. The reason I just came into this thought because I'm having a cup of coffee here, and went out and got that. While it was cooking, I came out here in the kitchen, and it's starting to snow a little bit. It's very pretty out. It's cold. I've got a nice fire going in the wood stove, and I came in to get a cup of coffee, and it reminded me the other day that some of the coffee that I was making was bitter. So I wasn't getting the flavor out of the coffee that I thought that I should get. It's not a really expensive coffee, but I drink a lot of it, and so I want it to be a good experience, and I couldn't figure out it's a good coffee, so I couldn't figure out why many times it was a little too bitter. As far as the coffee goes, I'm going to probably blame myself on grinding it up a little too finely and having really hot water, a little too hot water for the size of the grounds. It's called extraction, and it's the hot water that's extracting the stuff out of the coffee beans that you've ground up out of the grounds, and that's what causes that bitterness. If your water's too hot or your grounds are ground too thinly. So I'm not getting the flavor out that I wanted. But I found a solution to it. I got a nice cup of coffee. Now, what about trading? Why aren't you getting enough money out of your trade? Well, one or two reasons. You want too much, or number two, your skill level or your rules aren't providing you the mechanics of creating trades at trade entry that are going to give you the dollar volume that you're looking for. If you're looking for too much money, it probably means you're looking for too many pips. If you're trading long term, which if you're a beginner, again, I just don't think that's a good idea. You're not going to learn anything. You're not going to experience the market. You're not going to be prepared for all the wild throws that the currency market can throw at you if you are just trading, 10, 12, 15 times a year. If you want to trade long term, you should start short term and learn your craft. And then you can map those skills up. I've said that many times. But if your expectation is too much money, well, what does that mean? It could be too much money in relationship to the size of the bank that you have. You're trying to make $200 a day and you've got a $3,000 account. It could be that your trading plan demands that you're trading the $3,000 account, and in order to make $200 a day, you need to get, you're getting $3 a pip, so you need 100 pips in order to make $300. So, is that realistic? You have to be realistic about things. But let's say that you are realistic. You got a $3,000 account. What's reasonable to expect? Well, if you're going to be having an expectation of how much money you want out of the trade, what's the reason that you're looking for that amount of money? If you're looking to supplement your income, I gave an example on a video that I just did not long ago, probably a couple of weeks ago, about having my oil delivered, and it was about $420. And so wouldn't it be nice to have if you were retired and living on Social Security and you were hitting a $400 a month oil bill, and your Social Security was the average, which is around $1,200, a month, $400 is a big chunk out of that. So it'd be nice from your trading, and you know, we don't all retire with just Social Security. You can't depend on that. So you have other assets and things. It's not like you're just making $1,500 a month. But even if you're making $3,000 or $4,000 a month, $400 a month on top of everything else that you have to pay is a lot of money to pay the oil bill, and that could run 2 times a month if you're in a really cold area like I am. We just had 2 deliveries in the same month last month because the temperatures were running 5 below. It was really cold, and so you know we're $800 that month. But on general, averaged out, say during that cold periods, $400 a month. Okay, so what do I need to do to make $400? Well, if I had a $1,000 account, I could trade 1 mini lot. I'd need 400 pips a month in order to pay that oil bill on a mini account at $1 a pip, right? So 400 pips divided by 4, it's 100 pips a week. You trade successfully 3 days a week. That's 30 pips a day. Are you going to be able to consistently make 3 days a week, 4 days a week, 30 pips, 30 pips a day? I don't know. I think it's going to be really tough to do that. Well, if you had a $2,000 account, then you could make 15 pips a day. If you had a $3,000 account, make 10 pips. So there's a balance between your expectation and the amount of money that you have and the amount of pips that you're trying to get with that money. You have to put that stuff together. Otherwise, you get a bitter taste in your mouth from making the coffee the wrong way, or you end up failing and losing. You know, the worst thing you can do is have an account, a total account size that you have to trade the whole freaking thing in order to make your money, because then you're under pressure because you're trying to pay a bill. You know, if you have a $30,000 account and you make 10 pips, you're making $300 a day. And I mean, that's you know, 1% of your account. Can you make 1% every time you trade? Well, you know, I mean, I don't know. I have a previous, when I was trading mini accounts and stuff, of making 1.27 percent, or 1 point something percent. But as soon as I tried to push more money at it, I wasn't trying to get so many pips because I had more money and balancing out, and I didn't have to take the kind of risk that you have to take to make over 1% every time you trade. You know, if you could look at the long term, let's say you had all the money in the world that you needed, and you were trading to increase your general wealth. You were trading to give yourself maybe a couple of $100 a month to go out with for a nice dinner, or go out to the game or something, pay for tickets to go out to the game, and you're trading $30,000-$40,000 account. You wouldn't be worrying about making that couple of $100 to put away. You'd be trading differently than if you're trying to make that couple of $100 on a $10,000 account. Okay, so it's relative to pips and the amount of bank that you have, but it also has a lot to do with, are you short stacked and sitting at the table with guys that have more money than you do. Then you're playing scared. If you've played poker at all, you know exactly what I'm talking about. And if you haven't played poker, it's a good game because it brings out the worst in people, and it will rack your emotions terribly until you get good at it. I used to play a lot of poker, and I got to the point where I'd sit down at the table and my risk was a week's salary. So That's where I was playing. And I wasn't doing outstanding for the risk that I was taking. I was making money, but I wasn't making money in relationship to the risk that I was taking. And I ended up playing against a pro poker player, and he cleaned my bank out, cleaned me out in one set. I couldn't, because I came to the table with a week's salary. He came to the table with a month's or a month and a half. He could always reach in his pocket. He always was walking around with $1,000 or $2,000. He could always reach into his pocket and come up with more money. So he was fearless. He wasn't worried about me. I was worried about me in relationship to going against him. So now you're going into the currency market and you're short stacked. No matter how much money you have, you got a $200,000 account. You're short stacked because 85% of the dollar volume that's going through the market that you're trading in is done by the institutional traders that are a lot brighter than we are, and they're trading for a whole different reason, and they're the dog and we're just the tail. So you're not going into the market primed up to compete at that level. So no matter how much money that you have going in, you're short stacked in relationship to the size of the game that you're playing. So now let's back down and say, what would I be comfortable with losing on a daily basis? If you have a $10,000 account, they might say, well, 2%. So $200 is that's when you close it down for the day. You're out. Well, that's 20 pips. So if you're sitting there and you make a wrong trade entry and your stop is 20 pips out and you lose, you're done for the day. Okay? Well, what if you had a $30,000 account, but you were just playing with 10? Now your 2% of your bank is $600, but you limit yourself to $200. Now that's a different story. Now you can trade with more confidence, because now you can lose 3 times in a row, and then you'll get your winner if you're better than a 1 in 3 trader. So if you look at your personal situation and what your needs are and what your assets are that you're bringing to bear, you can concoct a recipe of rules that won't give you a bitter cup of coffee, and it won't take you to the wood in your trading. You can have fun with it, you'll be relaxed with it, and when you get good enough, you can pour more money into your back the truck up and dump your money into that account and start trading with size. And if you trade the same way with size that you did when you were coming up, then you'll be okay. Peter Rose, Longwood Currency Trading. Have a great day and a great trading day.